The president just announced that he wants to take Fannie and Freddie public through an IPO and get it done by the end of 2025. Should we be excited? Should we be nervous? Is this good for housing? Or could this disrupt the little bit of momentum that we have going? Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest, I joke, and back by popular demand, I joke.
JC.
And my main man,
JC.
John Coleman.
Dio, what's popping?
I just wanted to, switch it up a little bit today.
That's good, man. Hell
Tease the audience, thinking they had a special guest.
Yeah.
I wanted to tease you, making you think that you were backed by popular demand.
Neither are true.
Neither are true. You have a select few that love you, though.
I know. Shout out to those select few people who are smart enough to see greatness when they see it.
They are smart enough to see greatness when they see it. I do like that you're wearing your old man hat today.
Oh, yeah. I did not give a shit outfit.
I was all worried. I'm like, God, JC's probably going to roll in here wearing another Boston hat. I really wish he would put on that unk hat.
This is my outfit I use when I rollerblade, run on the trail, or cut the grass.
It's like a great unk outfit. It's not even unk because unks are cool.
Yeah.
You're like the great unk.
Yeah.
Yeah,
NIMBY,
not cool at all.
NIMBY.
Not in my backyard.
Nope.
Not in your front yard either.
God. Neither.
You ready to do this?
I'm already not looking forward to this episode because it deals with a topic I could give a shit about. But I guess there's tens of people out there.
There are tens of people that are going to want to talk about this. This is topical. This is current events. This is like mainstream media is covering this.
The only news I care about is when is it going to stop being so hot?
Well, it's August and we live in Florida.
Your kids started school today?
My kids did. Well, my one kid did.
Did you tear up? Did you take a photo out there, like in the middle of the driveway?
I didn't tear up, but I woke up early because guess what? For me, for my baby, this is her first day of school.
So you already put the home on the market. First day, home's on the market.
No, I mean, look, the Florida housing market's soft, but John, it's not that soft. It's not. It's going to take me 9 or 10 months to sell my house soft. It may take 9 to 10 weeks to sell my house soft. But it's not at that soft. But yeah, no, okay. I woke up early. I wanted to see her get off. She was leaving early. They're going to do senior sunrise. She was wearing her little senior crown that all the kids make when it's your senior year. They didn't do that shit when I was in high school. But nowadays, they give you a crown
because every kid now gets orange slices and a trophy. So
yeah, they didn't give out orange slices, but they did all have crowns on that they made at their homes, and it's like a big deal. Like they steal They ask them to be donated from Burger King, the crowns. Then they decorate them and they wear them like 6 times throughout the year.
What, they finger paint and do chalk sidewalk drawings?
Possibly. I mean, who knows what they're doing? Whippets, probably eating mushrooms.
That's what they should be doing senior year? Shit, I'll start a class high. Anyhow,
so you're too hot and you're already mad that kids are back in school, which means traffic now sucks.
Yes.
All right, so John just got grumpier.
If that's possible.
Yeah, you coined a new phrase, trash, for the TLOP community.
I like how everybody adopted that.
Oh,
and now
everyone
can see it.
Yeah, everyone just circled around it. But we're going to talk about that next episode.
Okay, perfect.
Yeah, because we did have an amazing What's Popping trip to Chicago.
Shout out to the TLOP coaches.
You're going to have to tune into a specific episode where we talk about that. So if you ask me, Dio, what's popping, I'd probably tell you how excited I was. Not that my kid's going back to school, although she was excited. I'd tell you that I went to UCF's practice on Saturday.
Okay.
And that was a cool event. Not so much because I got to see my favorite college football team practice and get ready for the season to come, but I got to see my kid out there. And that was really cool.
Shout out Blake Bortles.
Blake Bortles is not my kid. In fact, I don't think mathematically he could have ever been one of my children. If you're picking up what I'm putting down.
Best UCF quarterback of all time.
Probably better than Dante Culpepper. All right, let's a little humble brag moment for my kid, but let's get into today's show. But before we get into today's show, how about a word from today's show sponsor? If you're anything like me, you got to be leveraging AI. And most of us, we're just scratching the surface. But there are plenty of originators out there that are doing deep dives with some of the best technology. If you want to learn from these type of originators, I'm going to invite you to an exclusive event being offered to us by our friend Luke Shankula, the owner of Loans on Demand. So here's what's happening. A small group of loan officers are using AI to dominate their markets while everyone else is cold calling agents and competing on rate. The gap is widening daily. If you want to learn AI from actual users who are going to share their best practices, what they've learned, and they're going to shorten your learning curve, this event, it's for you. Feel free to go to our website, tloponline.com, or reach out to our guy, Luke Shankula, with Loans on Demand, and Luke will make sure you have your personal invitation to this AI summit. There we go. Yeah, we have a busy back half of the year. By the time this airs, you and I would be leaving for Louisiana.
Baton Rouge.
Yes, before I go to Denver for the Acuma conference. Then we get to go to Sales Mastery powered by Momentum Builder. That's, what is that? October 14th through 17th. Then right after that, we're going to head to Nashville, Tennessee, where we get to go to Fuse by AIM. After AIM Fuse, I'm going to head in November on the 13th to the Wisconsin Mortgage Bankers Association. So if you're going to be in or around any of those areas, y'all should come hang out with TLOP, especially at the bigger events. The Acuma conference, if you work for a credit union, it's your biggest conference of the year. If you're a mortgage broker, that AIM Fuse event is no joke, probably one of the biggest and best events of the year. And for all originators, Sales Mastery, like I remember being a young rookie originator and Sales Mastery changed my career. Now you're adding powered by Momentum Builder, you're getting a 2-for-1. There's going to be over 1,000 loan officers there. Come hang out with TLOP.
There it is.
Yes, good times. And if you want to inquire about us being a part of your event, reach out to me, Dustin Owen on LinkedIn, or you can go to our website, TLOP Online, under Media Inquiries. You can inquire about what it takes for us to be a part of your next event, whether it's as a keynote, moderating a panel, being on a panel, or being your media sponsor and showing up to podcast. We are available to do all of the above. So, John, you and I were out of town last week, and on our way out of town, it is announced that the President of the United States proclaims that his administration, is going to take Fannie Mae and Freddie Mac public through an IPO. And it's going to happen by December. Okay, this is crazy talk. This is almost like a taco moment, which you know what taco stands for? Trump always chickens out. It's a funnyism, right? So the Trump supporters are going to hate me for saying that. The Trump non-supporters are going to cheer me on. Please know I'm neutral. I'm Switzerland. I hang out in the purple zone.
Did they choose the term taco on purpose?
I don't think they did. I don't know. Like maybe check with the writers of South Park and maybe they were involved in this.
The writers are going on strike because that show fell off hard.
Yeah, I don't really watch it. I know of the show. I've watched it off and on.
Every episode since it came out, and this is the worst 2 episodes I've ever seen.
Well, that's going to make me have to go watch it now.
You ain't going all the way back to 1997 to watch all that shit.
No, I'm going to go back to the first 2 episodes of this season and be like, John Coleman thinks that's trash.
It is.
Let me see if I agree with John or not.
Okay, well, go ahead.
But the news is the news, and taco comes from the tariffs, right? Trump was like, I'm going to impose this type of a tariff set by this date, and the target always got moved, and the tariff always got lowered.
Yeah.
So Wall Street and a group of investors just started like referencing taco. Trump always chickens out.
There it is.
So I'm curious if this is a taco type moment, or it could be I snorted a bunch of Sudafed, it's 11 p.m., and I am thumb raging on social media. I don't know how realistic it is to pull off what he states he's going to pull off in the time frame he says it's going to get done by. And I don't know if it's what's good for housing and what's good for mortgage rates.
Okay.
But that's what we're here to discuss. And I'm going to try to keep it as neutral as possible. I have 5 reasons why it's a great idea and 5 reasons why it wouldn't be a great idea. And then from there, everyone can be informed. That way, when someone asks them about the topic, they can speak on it somewhat intelligently.
There it is.
Right now, as intelligent as you could if you spent 5 years working actually in the trenches at Fannie Mae or at the FHFA. Right? Like those are the people that are the subject matter experts because they spent 5,000 hours. Any one of us who reads an article, listens to a podcast, we're better off because of it, but we're definitely not subject matter experts. So look at me as not a subject matter expert, but somebody who's bringing the relevant news to you and trying to break it down into terminology and language that's going to make sense. It'll be digestible. It'll be bite-sized, something that you can consume and now feel like you're empowered with a little bit more knowledge than you showed up with.
Okay.
That's going to be the main goal. So it's good to know backstory that recapture and release, like that's a terminology that we've been talking about for, at least the past 6, if not 10 years. That has always been in the cards for Fannie and Freddie. Back in the day, and back in the day is like prior to 2008, and then 10 and 12, when we had the Dodd-Frank Act, and then Fannie and Freddie went into conservatorship, then we had the CFPB, etc. Fannie and Freddie were always quasi-government agencies. Like quasi-government. They were publicly traded. Right now, John Coleman, I own 1,000 shares of Fannie Mae stock.
So you own the government.
I don't know if I own the government. The government owns me more than likely, but I definitely got my own paper cut in.
Okay.
Yeah, so I have my piece of that Fannie Mae, and for the past 10 years since I've owned it, it's basically not done crap for me.
Yeah, what kind of return you get on that? Like my True Leaf stock?
No, just about as bad as your True Leaf stock. The good news is I bought mine at like $2 a share.
What's it at now? 15 cents?
It's probably like $10 a share right now.
Oh,
so
okay.
it's done. Yeah, but John, when you look at how long I've held that
Bro,
for,
retire. What are you doing?
Yeah, 1,000 shares. Like my $2,000's now worth 10 grand.
Oh,
like
is that
no,
math? Oh, my
yeah,
bad.
yeah, no, that math ain't math, and no one's retiring on that.
All right.
Like I could go live in Laos and I couldn't retire on that $8,000 or $10,000 investment. No, it's probably been a terrible investment because over the past 10 years, I probably could have like doubled that $2,000 2 or 3 times, right? Just playing the rule of 72. But recapture and release has been a terminology because Fannie and Freddie were always publicly traded. Then when the financial collapse happened, then the government, i.e. the Treasury, i.e. the taxpayer, had to step in and prop up Fannie and Freddie from collapsing. Then they kind of quit being quasi-government and just straight up government agencies because they were taken into conservatorship. So when the government bailed them out, Fannie and Freddie started making money, and all that money gets put back to the Treasury. And if you go back and you've done your math, you'll see that Fannie and Freddie have given back all of the money that the government, i.e. the Treasury, gave them back in 2008, 2009, plus a profit. So since, let's say 2012, 2013, Fannie and Freddie have been a profit center for the U.S. taxpayer, meaning they have been paying money to the U.S. Treasury every single year. But the goal was never for them to be in conservatorship forever. However, they've been staying in conservatorship because it was stated when they went into conservatorship that in order to come out, they would have had to have $330 billion in reserve, right, to protect against future losses. That would be the purpose of having reserves. Well, today, as we record this in 2025, they're only halfway there. Now, that's still a lot of money. And people would argue that having $165 billion in reserve is more than enough. That what we experienced in 2008 was a once-in-a-century type phenomenon. We've learned from those mistakes and will never expose ourselves as a great nation again to a liquidity credit crisis like we saw in 2008. But the reason why they're still in conservatorship is because, well, we don't have the $330 billion. But when Trump ran in 2016, when he ran in 2024, he ran like many fiscal conservatives. This isn't a Donald Trump thing. This is a fiscal conservative thing. They've wanted Fannie and Freddie out of being owned by the government. They want to entice the private market to come back in, and they want to have more competition.
Question for you.
Yes.
So if Fannie and Freddie got out of their conservatorship, is that going to mean lower interest rates? Because that's all I care about.
Okay, cool. That's where I'm going with this. Yeah, sorry I'm taking the detour to get there, John.
No, this is good. Because if you said no, I'd be like, wow.
No, I'm going to get there.
Yeah.
Theoretically, more competition theoretically would drive costs down, right? As long as you don't have people that are in cahoots together and they're doing price fixing. But ideally, Fannie and Freddie should not have as much market share for 30-year fixed mortgages as they do. Like we should have the private market, or what we call private label securities, PLSs, instead of the UMBS bond, which is the uniform mortgage-backed security, which those are Fannie and Freddie loans all packaged together and then turned into a bond. That bond is then sold and traded, et cetera. Theoretically, you would. But theoretically, or let's say not theoretically, realistically, since the collapse, private money doesn't want mortgage. They don't want to be a part of it. There's not enough money. The regulations are too thick. The penalties are too punitive. The returns are too low for the private market to want to return. So Fannie and Freddie's kind of been the only play. And the thought is, if we release Fannie and Freddie from conservatorship, then rates would go up. That was released from conservatorship. And that was something that was ran on in 2016. It didn't get done in the 4 years of that administration. It was forgotten about during the Biden administration. Like, didn't want to touch it, didn't want to talk about it. Coming back into the Trump administration, he ran on it again. But the minute he was inaugurated, it was nowhere close to being on the agenda. Now, all of a sudden, it's not just on the agenda, but it's like on the agenda, and we are going to like jam this down your throat in record time. Like a record IPO. This would be the largest, which is crazy to call it an IPO because it's already like there are already stock shares out there. They just haven't been selling, I guess, any more of them. And they're not going to make the entirety of the shares available, but like 10 to 15%. But it could end up being a record-breaking IPO. So anyhow, so that's enough of the backstory. Let me just kind of walk people through.
Okay.
Like, let's figure out 5 reasons why this would make great sense. And then we're going to talk about 5 reasons why it wouldn't make great sense.
That makes 10 reasons.
That makes 10 total. Yeah, 5 plus 5 equals 10. Good job. Good job on the thing you did. All right. So, and pardon me, for the first time in a long time, I'm actually going to read off some notes because I want to be super prepared for this.
Oh, shit.
You know, this isn't a topic that you can wing. You got to kind of know what you're talking about and make sure you're
So what
structured.
you're saying is the past 559 episodes, you've just been winging it.
I mean, is it winging it if you know it so well? Because you've been teaching it and doing it for 2 decades?
I don't know.
That's
Coach,
not winging it?
I don't know, Coach Belichick. You tell me.
Yeah, you help thousands of people become homeowners. You coach hundreds of loan officers. You run dozens of branches. Like, it's not like the conversations we have on this show or the conversations I have with my kids, I have with my loan officers, I have with my borrowers, I have with my realtors.
Yeah.
It's not winging it. It's just I've been doing it for so damn long.
Yeah.
Yeah, it's all just stored up in the Chrome here.
Fuck notes. Let's go.
Yes, fuck notes. Although I have notes this time. I was trying to explain to my wife how when you say I fuck with that,
It's a good thing.
that's a good thing. Yeah.
Damn.
Yeah, she didn't quite understand it.
You had to break it down for her?
Yeah, just like she didn't understand why you wear a Boston hat, but you're not a baseball fan. She was
Baseball
confused by
is
that too.
Horribly boring.
Okay, you can't say that, but it's okay. You just did.
The truth?
All right, here's the truth. No, here's the truth.
Okay.
Let's get into it.
Let's go.
So first, let's talk about monetizing a government asset and generating revenue, right? Because that is what the president's trying to do. He wants to monetize this government asset, and he wants to bring in a bunch of money. If you IPO Fannie Mae, you're going to raise a ton of money. That money is going to go back into the government because that's who actually currently owns Fannie and Freddie through conservatorship.
Why should it go into the government? Shouldn't it go back to the people?
It's been going back to the people already through pushing the money back into the Treasury.
Got it.
Yeah, but it's not like when it cost the people money, they didn't take money out of your income tax refund.
I gotcha.
They didn't like take money. It's just a saying that look, when the government bails out a private company, it's the taxpayer.
Yeah.
That money has to come from somewhere. And, you know, the federal government raises their money through the taxpayer.
Okay.
But it wasn't like it came out of your paycheck.
Gotcha.
Ever. All right. But, you know, my note is what I've already said. The government has been in control of the mortgage giants, Fannie Mae and Freddie Mac, since 2008. An IPO would allow the government to sell its stake and generate a significant influx of cash. Some estimates suggest the government stake could be worth hundreds of billion dollars. So could that be hundreds of billions of dollars that goes to pay down the deficit? Could it be hundreds of billions of dollars that is used to then make sure Fannie and Freddie have the right amount of reserves? That's the big unknown. The right amount of reserves would be fantastic for keeping interest rates low. Pushing the money back to the deficit may be good for the long-term success of our country, but it wouldn't be good for mortgage interest rates. But we'll talk about that on the flip side. The second positive point that I would have for why it should make sense to take Fannie and Freddie public would be ending the government's conservatorship. Like, there's been a lot of debate. Like, why is the government all up in mortgage lending? We're already all up in mortgage lending with FHA, VA, USDA loans, right? All those loans that end in A mean they're government loans. Do we really need to be all up in Fannie and Freddie? Should Fannie and Freddie be the only like takeout for conventional loans, or should we entice the private market to come back in? A primary goal is to return Fannie and Freddie to private ownership, which was always intended to be the long-term plan after the government bailout. This move would remove, it's kind of redundant, This move would remove the government from its direct role in the housing market and shift the risk to private investors. But when you shift risk to private investors, are private investors going to be okay with the current level of risk? Or will private investors want some kind of a additional payment for that additional risk, which could lead to higher interest rates? We'll get to that. Encouraging innovation and competition. So supporters of privatizing Fannie and Freddie argue that returning the companies to the private sector, which is taking it public, not backed by the government or in government conservatorship, would foster more efficient capital allocation and encourage them to develop new mortgage products and services.
Oh, that's not bad.
Yeah. Now, one could argue, because I lived through the 2004, 5, 6, 7 before we got to 2008, Fannie and Freddie were getting super creative with what they were going to purchase. And we were doing loans, and my old school friends would appreciate this. EA1, EA2, EA3. Loan officers, imagine running DU, and instead of getting approved eligible, you get expanded approval, level 1, level 2, level 3. The higher your level, the riskier the loan. You still got the approval. It just came with more mortgage insurance required and a higher interest rate. But we were getting some crazy stuff through, like 65% debt income ratios. It was also this type of lending that allows us to do stated income loans. And then one would argue, is that a slippery slope that we don't want to return? So we'll have to wait and see on that one. How about the fourth reason why this makes perfect sense to take the Fannie and Freddie public through an IPO? And public-private, they're synonymous. At least in my vernacular, they are. Fulfilling a long-standing political goal. Taking Fannie and Freddie public has been a stated objective for some time. The move is viewed by some as an opportunity to reduce the government's role in the economy and fulfill a promise to a segment of voters and investors. And there are definitely plenty of fiscal conservatives that, small government's good government. Less government, better for business. I'm not arguing against that one bit, actually. And then the fifth one, which I think this is the driving force, because I am whatever we have to do so the rich get richer. The reason why I'm neither red nor blue, the reason why I'm a registered independent, because I do believe, if you want to know where does Dustin Owen stand on politics, politics to me is like the WWE. They're all friends behind stage and everything is scripted. It's all a big show. Like, they're for team money and power. Elected officials are for team money and power. As long as they can make money and their friends and family can make money and they stay in power, they'll do whatever it takes, right? So knowing that these people are all for money and power, who really benefits by taking Fannie Mae and Freddie Mac public? Donors do. Rich business owners, hedge fund managers, right? So satisfying investors is the fifth reason why it would make sense to take Fannie and Freddie public if you were the president. Hedge fund managers and other investors who already own shares in both Fannie and Freddie have long advocated, they've even sued, by the way, for their privatization. An IPO could unlock significant value for these shareholders who have been unable to receive dividends or exercise shareholder rights while the companies have been in government conservatorship. So imagine you're a billionaire, right? You run a hedge fund and you have 3 million shares of Fannie Mae. And you can't really do anything with it. You're not collecting dividends. You don't have a chance to vote at shareholder meetings. The stock has basically been worthless because the company's been stuck in conservatorship. Until it gets out of conservatorship, you can't really do anything with it. 3 million shares? And imagine this company going back to having a $10, $15, or $20 share value price. Ooh, that's some serious coin that you're set to make. And if you're a great donor or a supporter of a particular politician or political party, wouldn't you not be advocating for their ultimate release? So those would be 5 reasons why you'd want to do this. Let's talk about 5 reasons why you wouldn't.
Fascinating.
Are you fascinated yet?
This shit is made up numbers with made up shit that the average human will never even see. It's just cannon fodder to put at the bottom ticker of fucking news channels, Dustin.
Well, to that statement, I would agree for this one reason. None of us should be losing sleep over this. None of us should be up in arms, holy Jesusing the whole entire world, because we have very minimal control over whether or not the IPO goes through, it's successful, But it is our job as mortgage and real estate professionals to be subject matter experts. And when you come across somebody that they are letting this get their goat and it is living in their head for no good reason, we can maybe back them off a cliff and calm them down and be like, listen, it is what it is. And as much as you may hate that statement, like there's nothing we can do about it. So we're going to roll with the punches. We're going to ride the waves, play the hand that we're dealt, still be good humans, and put one foot in front of the other.
Well, you hope they go private so you get your cash windfall.
Yeah, I don't think I'm going to get that much of a cash windfall.
Damn it.
Yeah, and don't get me wrong, $8,000, $10,000, $15,000 is a lot of money, but it's not, luckily for me, I'm very fortunate. It's not game-changing money. So, no, it's just more money that you and I can take.
Just another way for the richer to get richer. Sounds like a plan.
No, I strategically bought that, and I actually missed.
No, not your poor ass. I'm talking about the guy that owns like 300 million shares.
Oh, yes. Yes.
Not your broke joke. You ain't got no vote when the board comes for the meeting.
Not one bit. No, I don't. All right. So then let's talk about the 5 things, and I've kind of alluded to most of them already.
Okay.
But risk of higher mortgage rates.
Yes.
1,000%, John. The answer to your question is that more than likely, now look, we don't have enough details, but more than likely, the odds are in favor that this would not be good for mortgage rates. It would make mortgage rates go up.
Like what, 0.5%, 3%? Give me an exact number.
0.5%.
That's it.
Yeah, so 0.5%, 50 to 100 basis points. So, it could be a full 1%, but I'm going to tell you my guess is 0.5%. Because what'll end up happening is that the current rate of return on these bonds is not going to be great enough. The price of these bonds won't be low enough so that in order to entice people to want to purchase these bonds, they're going to have to drop the price and increase the rate of return. That impacts the interest rate. And why is it? Well, if the government isn't wholeheartedly, emphatically backing the performance of these bonds, people are going to deem them to be riskier, which means investments in general, life in general, is all about risk versus reward. The riskier the investment, right, the cheaper I'm going to need to purchase the investment for, or the higher the rate of return. Right, if you're giving me a guaranteed 4% rate of return, like that's not risky at all. But if the guarantee isn't a full guarantee and the return's only 4, I'm gonna want 4.5, or I'm gonna want 5. I want something better than what I get when it's emphatically guaranteed. So my notes go on to say, without the explicit or implicit government guarantee, investors may be perceived that the mortgage-backed securities sold by Fannie and Freddie are riskier. So they're going to demand higher yields. This increased cost of the companies would likely be passed on to borrowers. And they would be, 100%. Not might be, they would be. It's also going to end up being reduced access to credit for certain home buyers. Right, so right now, Fannie and Freddie are in conservatorship, and they have the 100% backing of the U.S. government. Okay, Fannie and Freddie are more willing to do 97% financing when there are investors willing to purchase those loans. Investors are willing to purchase those loans because it's backed by the federal government. If the federal government quits backing, then are you really going to be willing to buy a pool of loans that has a bunch of 97% loan to values, or are you going to want 95% loan to values? What about DTIs? Oh, I'm cool going up to a 49.99% DTI. Oh, now I'm not. Now I really want 45% DTIs. So all of a sudden, we could see access to credit evaporate a little bit when it comes to certain borrower types. This would make financing less, be less borrowers eligible for financing. Now, we'll still have FHA to fall back on. We'll still have VA for our veterans to fall back on. Then the question would be, would the private market come in to fill that void? And the answer is more than likely they would, but at what cost? So now all of a sudden, to get the best rate, you need a 45% DTI. However, you have investors willing to go to a 50 or even a 55 if you have this thing called residual income, but you're not going to get that 6% rate. You're going to get the 7.5% rate. And then what does that do for affordability? What does that do to make access to credit available? It limits it. So that is definitely a concern. You definitely have the potential for market instability. And I will tell you, the market doesn't like instability. Like, that's what the market doesn't like about tariffs. Like, especially the taco tariffs, right? Oh, I'm going to do this, psych, head fake. No, I'm not. Like, the market's like, just tell me the way things are going to be and we will adjust and start trading accordingly. But we don't like anything that's frantic, anything that is uncertain, because we need to hedge our bets. Well, potential for market instability, basically the government's backing of Fannie and Freddie has provided stability and liquidity to the secondary mortgage market. Removing this backstop, particularly without a well-defined alternative, could introduce uncertainty and potentially destabilize the housing market during a future economic downturn. So just know, look, nothing changes if nothing changes. We may have to rip the Band-Aid off, but we could find ourselves on some rocky soil for a period of time unknown. How about this one? No one's talking about this one, but I'm going to mention it. Loss of taxpayer profits. You remember earlier I said when Fannie and Freddie went into conservatorship, it was because the federal government had to bail them out. But then as they became profitable, all those profits were funneled right into the U.S. Treasury. Okay, that's a profit center now. The minute that you take them public and they are a private entity again and not a government-owned entity, where do you think those profits are going to go? Not.
Oh, shit. Yes.
Yes, not to the Treasury. They're going to go to the shareholders, which high five if you're a shareholder, right? Hey, Fannie and Freddie are profitable. They're kicking ass. You're getting dividends. Your share prices are going up. You're getting richer, John. Way to go.
Okay.
But you know what it's also doing? It's taking money away from the U.S. Treasury. Right now, when Fannie and Freddie are profitable by $1 billion, that's $1 billion that gets to go into the Treasury. It's $1 billion that goes into our country's budget or to pay down our deficit. That money goes away the minute that this IPO happens. And then the fifth one is just more of a timing mechanism. Like we're in August recording this.
Mm-hmm.
Talking 5 months. Like this is some complex stuff to have to execute, right? So privatizing two massive entities that collectively underpin a huge portion of the U.S. mortgage market, it's incredibly complex.
Mm-hmm.
So we have to analyze it. We have to have policymakers give their 2 cents. And right now they are very concerned about the feasibility of a quick IPO. Like the size of the capital requirements is a big issue. Like, does it need to be 330 million or billion? Does it need to be 165, somewhere in the middle? Or do we use this money from the IPO to get it to 330 billion, which is the number that was set back in 2008? And then how are we going to structure these companies moving forward? Like, do they operate as a utility? Are they truly a private entity, or is there still some kind of a quasi-government backing? And what does that look like? And then how do we relay that onto investors so investors can make the appropriate decisions when they're valuing how much these bonds are actually worth? It's the bonds that ultimately impact somebody's mortgage rate, right? So that's why it's very important that we know about it. So there's a lot for us to try to tackle in 5 months. There are many reasons why it would make sense on the surface to get them recaptured and released. However, there's also a lot of concerns, and some of the smart people that I follow, and I'm going back before this was announced, I'm going back like 6 months ago, and these people are, if anything, probably Trump voters, and they're probably Trump supporters, but they're also mortgage industry experts. They weren't all for recapturing and releasing. They didn't think we were ready. They didn't think it was necessary, and they were really concerned about the secondary market, the private market, actually stepping in to fill the void. And they felt like they wouldn't fill the void to the tune of making rates better, but to make rates worse. And they wouldn't fill the void to the tune of making financing more available, but making financing less available. So as a mortgage professional, take being an American out of it, take being a voter and a taxpayer out of it. As a mortgage professional, I lean towards the let's slow play this. I don't think we're ready. I don't think we need to rush anything. I'm not saying we shouldn't recapture and release. I think we should really do some studies to see what type of appetite the private market has and how much of a void can the private market step into to fill. I think if we do it between now and December 1st, we could take an already kind of not unstable, but already not fun mortgage market and not make it any better. Those are my 2 cents. But let's do this. If you have your own 2 cents,
keep it to yourself.
Well thought out. Yeah.
Keep it to yourself.
No, and they're well thought out. Hop on our YouTube channel, click subscribe, and then comment. Just comment. Let's get a fun, well thought out debate going. Should we rush to privatize Fannie and Freddie much quicker? Should we slow play this, still look to release them, but no time in the immediate future? I'd love to get your take, and your way of giving your take is going to our YouTube channel, subscribing, and then commenting along the way. Y'all, thanks for coming to hang out with us. He's John Coleman. I'm Dustin Owen. You just tuned in to the Loan Officer Podcast. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.